Hi all, this is Raghu here. Hope everybody is doing well. Today I thought I will introduce you to something new where there is a method for madness to identify how market works. What is the method for madness? So there are a lot of method to madness. You have trend analysis, you have pivots, you have Gambrilla pivots, you have patterns, you have support and resistance waves, supply and demand. There are gun, and then what else? So you have Elliott waves. Make no mistake, you have Elliott waves which can predict the market. But when you use so many technical analysis or go through everything, you won't be able to, make use of all the technical analysis. Some of you folks might think that knowing technical analysis is the way to make lakhs and crores in market or millions in market. Sorry to disappoint you, it is wrong. I'm telling it, yes, I myself is telling it. I'm the one who is going to share my knowledge, but still in my trading experience, I have got a very less trading experience. I trade purely in Nifty options and I'm a full-time working professional, and my trading time usually will be before 10 a.m. But I successfully manage and maintain close to 35 to 50% of my capital every month. Yes, you heard it correct. But can I make more? Are there people who are making more than 50% of their capital in a month? Oh, yes. There are people who are making 500 to 1,000 times more their capital in option trading. I'm not joking. There are professional traders who make money just by trading Nifty and Bank Nifty. Now, for me, I'm not a full-time trader, so I'm happy. I maintain my expectations very less. But in a quest to reach this consistency, like all beginning traders, I have gone through a lot of learning curves, a lot of learning phases, and I have tried to master various technical trading methodologies, because even I felt that learning this will bring me a lot of money, or money will rain. But that's not the case. The case while trading is only 10% constitutes to technical tradings or technical learnings. Once you learn mastering the technical analysis, what you learn, that mastering itself, this is a crucial phase which is going to take another 15%. So technical learning and mastering, say it's going to take 25%, but 50%, make no mistake, 50% should be set aside for trading psychology. Oh yes, trading psychology is very important. The fear of losing, the greed of making more money, these are the two factors which will continuously play on your mind and which will limit your capabilities. And the rest of the 25% is money management, how to put stop loss, how to move your stop loss when you are making money. These are the different things. And just to cut short, what am I bringing new here? Now, please take a guess. In all my videos, I was telling I'm going to bring something new. It's nothing but Fibonacci trading. So a lot of people, there are a lot of material available in YouTube. A lot of traders use Fibonacci methods, and there are different flavors to using these Fibonacci methods. So Elliott waves use Fibonacci to mark the retracement and the targets or the expansion, and some people use Fibonacci pivots. So what is the method I'm going to teach you? I'm going to teach you a very simple method where if you follow it in a disciplined way, you have maximum money. And remember, I have told you that price action is very important, whether you're following pivots, supply demand, or Fibonacci or Elliott waves, anything and everything will be bucketed or filtered into price action. These are not some magic lines. Most of the people use these technical methodologies to trade in the market, and while trading, the buyers and the sellers together form certain price action, and those price actions are very accurate at the levels. Now this is the naked chart. This video will be short. I'm going to create more videos. This is just an introduction. All right, now just wanted to share, you guys know what is Fibonacci, right? Fibonacci is, let me open Paint. What is Fibonacci? Fibonacci is a numbers. So a lot of people tell who introduced Fibonacci, the great mathematician of Italy, right? Italy. Yes, the Renaissance. Fibonacci introduced these thing. That is how this came, but this was far dated back to India. It has Indian roots who had introduced this Fibonacci, and this Fibonacci has a great connection to the Mahamrityunjaya mantra, which Hindu use. So there is a lot of relation to Fibonacci. The Milky Way galaxy is in the form of Fibonacci. The conch shell which we use in puja is in the form of Fibonacci. Your ear, yes, your ear is in the form of Fibonacci. And the sunflower seeds, the honeybee, the way they build the honeybee nest, that is very accurate to Fibonacci. So there are a lot of Fibonacci found in nature, and usually in the earlier greater generations of humankind use this Fibonacci sequence to build the structures. So in this Fibonacci, the most famous number is 61.8 or 1.618. This is called as golden ratio. So they call it as God's building measurement. So that's the reason you find this golden ratio everywhere and anywhere in the universe. But we don't know why exactly it occurs so frequently. Nobody is able to decode. But however, our objective of this video is to use this philosophy to trade in the market. So you know Fibonacci is 1, 1, 1, 1 plus 1 is 2, 2 plus 1 is 3, sorry, 2 plus 3 is 5, all right? So 5 plus 3 is 8, 8 plus 5 is 13, 13 plus 8 is 21. This is the Fibonacci numbers. Now, what are the ratio? So if the 2 is divided by 3 and 3 is divided by 5 or vice versa, you get the Fibonacci numbers. Keeping it very simple, guys. You have a lot of videos on the website. Now, when you see these videos, what is very important is, where is the drawing, man? Okay, let me use to identify the swing. So what happens, what I mean by identifying the swing is, so when you go here, so let me use the paintbrush. Say this is a staircase, right? So on a staircase, say when you drop a blue ball, this is the ball. How does this ball will go? When you drop a ball, it goes up, comes down, goes up, comes down, goes up, comes, right? Now, even this dropping the ball, this is a staircase, remember, goes in a zigzag way. This is nothing but, consider this top as A, B, C, one swing, and it continues. A, B, C, second swing. This is the third swing. A, B, C, and so on. Now, this is very important. When you see throwing the ball on the staircase and observing the market, what do you see here? Now, there is a lot of emotions. These candles are nothing but the buyers and sellers, millions of buyers and sellers buying and selling simultaneously. And some people are afraid, some people are ecstasy, and some people are, moved by greed. They want to make more money. So it's a natural phenomena, right? Is there anything unnatural in human emotion, especially when it comes to making money? Greed, fear, inconsistency, These are the characteristics which most of the traders, including me, imbibe it since we started trading. So whoever overcomes this has the higher potential of making a great trader. But anyway, when you identify these swings follow Fibonacci sequence, whatever I said. So in this Fibonacci, my method of Fibonacci is this. This is all. A, B, C. If the same thing, zero, this 100% is A, 0 is B. You can call X, Y, Z. So market goes up. When coming down, the C point, wherever it takes support. So in my Fibonacci, you can see it starts from 100%, 23.6, 38.2, 0.5, 61.8, 78.6, 100%, sorry. 0, 100%, 1.13, 1.27, 1.14, 1.618. Now in this Fibonacci, all right, in this Fibonacci, you have to identify the key levels. So for us, the key levels starting from the beginning, 38.2 level, 0.618, 100%. Does that mean that we don't focus on any other things? No, honestly, if you focus on multiple things, you will get confused. See, trading, I said today entire day, there's another video I shot. If you just come here, since morning, where was the market? Market was hovering here. Was there any trade since morning 9:15 till 2 p.m.? Hardly nothing. So after that, market moved almost around more than 150 points in any option, whoever took the trade. So trading is about discipline. It's not just blindly following. So most of the folks don't understand what is discipline. Discipline is waiting for your winning setups. Now this 100% is nothing but when a ball is dropped, ball can go up till 100%, 23.6, 38.2, 50% or 60% and take support somewhere. That is what X, Y, Z or A, B, C constitutes. And when the ball comes down and crosses 100%, this is a full retracement. If the market goes from here and then crosses below 100%, it means it has crossed 100% downside. So when this happens, what are the targets? Now this is called as Fibonacci retrace. Market is retracing. When it is retraced 100%, it will start expanding. So of this swing, if market is going down, I'm just telling you, your target will be 1.13, 1.27, 1.1414, 0.618. Any one of this will be your target. Understood? Is it simple? Now, why these three levels is most of the times, if the market is in uptrend, if the market is in uptrend, what happens is price goes up, comes down, it will try to take support on 61.8. It can take support at 0.5, it can take support at 38.2. What I mean, why 38.2 is important? If market is in super bullish mode, if it is in a super bullish mode, the retracement will not go below 38.2. It will stop here, price goes up, comes back of the swing, it will stop here, and then it will continue going up. Now, what will this target be? This target will be same. So this is Fibonacci expansion. You can use the retracement in a reverse order. Understood? This is where I'm touching. This is the 100%, right? Consider this as 100% now instead of this. Market came down, went up, and this target will remain same. 1.13 in a very low momentum. In a high momentum, usually 1.27 more or less it hits whenever a range is broken. 1.618 is the strong target. Now, as you know, there are a lot of swings. So this is shallow retracement. Even 23.6 can happen, 38.2 can happen. But for our discipline, we will keep 38.2, 61.8 and 100%. Remember, for our Fibonacci trading methodologies. Now, if market comes down to 61.8, this is a golden ratio, and majority of the times, more than 90% of the times, it will take support in an uptrend. Got it? In an uptrend, it always comes, takes support, and then goes up. This is called as deep retracement, 61.8, 78.6, or 100%. So we'll keep 61.8. Now, while price going up, what you need to understand is it always tend to face a resistance at 38.2. Do you understand? Whenever a retracement happens to 61.8, you need to keep a watch on 38.2 retracement. And if this 38.2 retracement is taken out, then assume that market will go ahead and touch this 100% and can go beyond. So why we need to know this? Just suppose you are a trader who doesn't want to wait until market crosses 100% and try for one of these targets. Maybe market can reverse. You see a strong support here, sorry, resistance here. So you want to take a trade here at 61.8. You see some price action, so you take a trade here. Then watch 38.2 for any price action to see if it is taking resistance or market reversal. If 38.2 is taken out, you can ride the wave. 1:2. Usually 1:2 is the risk to reward. Simple. Do you understand what I said? In this way of Fibonacci, 38.2, 61.8, 100%. These are the three key things you need to remember. All right. Now, before I show you the actual methods, remove everything. A, B, and where is the C? This is the C. I'll make it big for you. A, this is A. This is B. Where is the C? This is hourly time frame of Nifty. Market came here trying to take support at 38.2. See here, even 23.6, it tried to take support, came 38.2. For us, 38.2, right? 38.2. If this trend was very strong, if market had moved up, it should have taken reversed from here. See the pause, the reversal wicks, and then market tried to go up, and this was the sign to go down. So these two areas, 38.2 and 23.6, you need to watch out. Now here, where is C? Our C is here. So this is one thing, actually our C is here, sorry, A, B, C. Now market trying to take support where? Can you see? What is this level? I'll mark the key important levels which I was talking about. $38.2, 61.8, 100%. So when the 100% is broken, what are the targets you could have gone? Here, this is also a swing, A, B, C. Okay, everything is a swing, but use your judgment to capture a bigger swing, the recent swing. And when market crosses 100%, what happens? 61.8 target is met, right? This is also same Fibonacci, 61 point target. See where it has met. So every time frame you have one swing. Now, what is the right time frame to use? The right time frame is the bigger time frame, and using the levels, you should trade on it smaller time frame. Now, this is since yesterday's uptrend, right? 100%. 38.2, 61.8. Where did the market took support? 61.8. So for tomorrow, if Nifty to go down, what is the key level it needs to break? Today's low. It has to break today's low. And if 100% retracement is taken out, then you have the targets set here. This is how you have to understand the market. Now, what's the beauty? This is one trade. Market went up from here. 61.8. When the market breaks 100% retracement, see where it is targets 1.27, 1.13. Near 1.27, you see the doji. I'm just trying to show how the market reacts. All right. Now, this is one big swing. Market fell A, B, C. What is the retracement level? I'm drawing for this. Market fell from here going up. So from 0, it is going up. What are the key levels? If the momentum is strong, where will it reverse? 38.2. So you have two swings. The way this is a bigger swing, what is the trend we are in? We are in a downtrend, right? We are in a downtrend. You can identify, put some 20 MA or Bollinger Band and see whether market is in downtrend. Do we have a Bollinger Band here? Yeah. Okay, it's below 20, right? We are in downtrend. You can add 20 EMA as well. Now here, what is this? Near 38.2, if you just follow Fibonacci. These are all negative signs. But after doji, you have a tweezer bottom or tweezer top. For me, tweezer tops or tweezer bottoms or tweezer tops are anything which are almost identical candles. Okay, this is almost identical. It has a small wick, but this is identical candle. If you get an opposite red candle, market goes down. Can you take that trade? Oh yeah, you can definitely take the trade. But what is the beauty? Why do you want to take a trade here? It's because it's a tweezer top or because it is near 38.2. I mean, this is how you understand Fibonacci. So what I'm going to do here is you have two views. So this is going to continue further. So one view is you have this. I'm going to stop it here. This has taken support as 61.8. This swing has retraced to 38.2. Now, what is the tomorrow's range? Key important range. This is hourly, so you can keep it for next 2 days or next week. So these two forms very important, right? You can capture the same thing in pivots. You can capture the same thing Fibonacci. That's the beauty of technical analysis. But anyway, if you're following Fibonacci, you need to stay true to Fibonacci. So this is a key level for tomorrow. So on this swing, if market takes out 100%, this is the level it will go. But you also have much bigger levels on the right hand side. So this swing, okay, if you consider this is one small swing, but if you consider this swing is gone, which is the next bigger swing? Can we consider this as a swing from here? One ABC, 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 but on hourly time frame, if you consider this as a big swing, okay, this has gone up and come down. Let's see where it has come down. Okay, 61.8. So let's consider this. This is a key important support. So from here, we have one swing. So market is below this 100%. What is the target it hit here? Do you see? 1.414. Now it has left some steam for golden ratio. This golden ratio is coming somewhere near this swing. So if it breaks this, 16,983 looks good candidate. Oh, definitely yes. And then you can follow this. You can follow on 15 minutes or 5 minutes time frame. So there are more trading strategies which we can make using the Fibonacci, but consider this as the introduction to Fibonacci, and our key levels are 38.2, 61.8 and 100%. Right, these are the key levels, and we will take trade only at these three key levels, not at 50%, not at 78.6%. Yes, 78.6% is a deep retracement. Even 50% is a very important Fibonacci. It's not exactly a right Fibonacci, but it forms the midpoint of the day. So there are a lot of price action moves near 50%. But for our trading, to gain 100% success or maximum success, let me not say 100%, we will stick to 100%, 38.2 and 61.8. And we will watch price action near there and then take the trade so that we can maximize our money. All right. So I'm going to stop the video here and I'll continue it in the next video. Thank you.